John Higgins, Mortgage One. Happy Monday. So last week, the big announcement, of course, was Liberation Day and all the tariffs levied on countries around the world. And that really sent the stock market spiraling down. I think we had two historically bad days on Thursday and Friday following the announcements. The beneficiary of that, interest rates. So we did see the 10-year Treasury drop as low as 3.86%. When I put these slides together this morning, we're hanging around 4%. The stock market has been up and down today, and the 10-year Treasury has continued to increase a bit. We're at 4.1%. So you can see the turmoil in the marketplace right now, sending both stocks and bonds on a wild ride. Let's recap what happened last week. We got the non-farm payroll number out, did come in above expectation at 221,000, did see the unemployment rate tick up a tenth to 4.2%. And the wage inflation number that came out was a little more benign than expected. So, that is great news. We're watching inflation like a hawk, and wage inflation is still one of the bigger components that we do watch on the inflation front, which leads us to this week. We've got the CPI and the PPI numbers coming out. As you can see from this graph, we've stayed above 3% for a year here. And the Federal Reserve would like to get closer to their target rate at 2%. We have not made much advancement on hitting that target rate. And with the news on tariffs and that, it's hard to see that we're going to get to anywhere near 2% soon. So we'll kind of watch and see where this week's number comes out. Overall, what does that mean for our mortgage interest rates? Well, Freddie Mac's market survey came out on Thursday, which was immediately after the announcement. So we did see our mortgage rates sag a bit more going into the weekend. The numbers today that we're seeing on the 10-year Treasury popping back up probably means we're going to see a little improvement in our mortgage rates as we head towards 6.5% and maybe a little bit below 6.5% on 30-year fixed money, which is great news. We'll have to see if that sticks. With all the turmoil on the announcement last week, everything here is kind of up in the air, and we probably will see interest rates bobbing back and forth with a lot of volatility. We'll give you an update next week on the inflation numbers and see if the stock market's able to recover from some of these huge losses that they absorbed after the announcement on the tariffs. We'll talk to you next week.